Sim, thank you so much for being here with me. Tom was just talking about just how significant this G20 summit potentially could be if we do see a communique actually coming later this year. We're seeing a number of geopolitical tensions, though, getting in the way of a number of financial institutions. As Africa's biggest bank, talk about how you're navigating that right now.
Jennifer, the world is complicated. It's going through a very turbulent time now. We've not seen the levels of volatility for decades. But, you know, if you go back to thousands of years of economic history, you have upswings, you have downswings, you've got turbulence, and you go back to equilibrium after all of these periods of turbulence. Our institution analyzes the environment, we analyze the geopolitics, the geoeconomics, we position our institution accordingly, and we manage for the future, looking forward over 10, 20 or 30 years.
Does this period, though, of instability potentially affect what we ultimately see from the Leaders Summit and the communique coming later this year?
It does. It makes it very, very difficult. You've got the United States, which is following a different path to what has traditionally been. We're going through a period of deglobalization from the perspective of the United States. But we believe that the United States is always going to remain inextricably intertwined with global issues and global events. We're respectfully making recommendations that we hope they will take on because the United States is going to be following South Africa. This is a long-term game, Jennifer, and you respectfully make your point, you argue for it, you give data in support thereof, and we're hoping that the authorities will follow.
One of those proposals is overhauling financial architecture, and in particular Basel reform. Talk about what you expect could actually be achieved, especially if we talk about the US and taking over the G20 presidency next year.
Well, there are two different types of things happening at the same time. The one is the US is no longer participating in Basel IV, for example. The EU has put the pen down. The United Kingdom has also put the pen down, subject to what will happen with the US. Everybody wants to be competitive. Other parts of the world have implemented Basel. We, as South Africa, have implemented Basel IV. So that's the one set of issues. The second one is we would like changes to the regulations such that we hold less capital for infrastructure projects on the African continent and globally. That's the second macroprudential type of changes we would be recommending.
What do you think that could actually open up then for the global south?
It could open up for Africa. We need $170 billion per annum on infrastructure. We can only raise $85 billion. Making those changes would release a vast amount of money, of capital, allowing us to write more projects to close that gap of $85 billion. That's just one example.
And Sim, this week we were focusing on the SCO summit that was happening and some of the reforms for policy and development policy in particular. Will we see that from the task force that you're chairing as well? Similar recommendations?
Our recommendations are about reducing the cost of capital for the global south and emerging markets, making it easier to move goods between countries on the African continent and in emerging markets, making it easier to build projects that are transformational, whether it be bridges, ports, data centers, and all our recommendations are calculated to make it easier to finance these transformational projects.
So similar to what we saw earlier this week, potentially?
Similar but different, and focus very much on the African continent and emerging markets.